Hey everyone, D here, back with another video on how to start trading. In this video, I'll be going over 4 different types of trading strategies that you can use to help you become a better trader. I'll be going over different examples with actual stocks and showing you exactly how to do each and every one of these videos. So with that being said, let's get started. Okay, so the first one I'm going to teach you is breakouts. So what is a breakout? So a breakout occurs when it breaks a current trend. So in this case, you can use it for downtrends, you can use it for uptrends as well. But for example, I have HCMC over here on the daily chart, and I have GGII on the daily chart. So what is a breakout? So for example, if this were to be in a downtrend, as you can see, when it went up this high, what will happen is that it pulls back. Now this pullback over there, how would you know when to buy? So first off, if you don't know, if you can't really see this that well, you can just use the daily chart as well. Oh, sorry, the 4-hour chart. And then you can see, well, it's after this uptrend, it made a downtrend. So how do you know it's a downtrend as well? Okay, so I'm going to cover both. So first off, as you know, this over here had an uptrend, right? Uptrend right here, just like this. All right, the reason for this is because, well, actually, it'd be a lot better if you had it like this, okay? This right here, just because, well, you got these wicks right here and it's going up. So this is an uptrend. So let's pretend we didn't see that big candle right there. All right, so what happened? It wasn't an uptrend and it broke the trend. So therefore, it's a breakout. So is it a bad breakout? Usually, if you see it break out, retest, and then it confirms it. But what happened here? So, special case here. It broke the uptrend, now it's in downtrend. So what do you do with the downtrend? Okay, so you take a line, put it from here, maybe to here. Let's see, let's go like this. I would say it's closer to this just because there's tips right over here as well. And, it really depends on how you want to level this out. Just because, look, it's a tip to tip, it'd be like that. A lot of people have different eyes for this, so really up to you how you want to pretty much work this out yourself. But for me, I'd say don't cut candle bodies and respect some of the tips. So if you can see right here, 1 touch, 2 touch, 3 touch would be a confirmed trend line, but there's many touches here, so that is also confirmed. So here's the thing, breakout trading. Usually I'm just going to talk about just buying, not shorting, just because, well, shorting, then it gets a little bit more advanced. But this over here is for people that are just starting to learn and they just want to know. Okay, so as you know, uptrend over here broke the uptrend. Now it's going back up. So this was kind of risky. All right, so if it's risky, what would you buy it right here? Well, why wouldn't you? You saw this big stick, right? Well, here's the thing. You don't know what's going to happen all the time. If that was the case, then everyone would be rich. But what you have here is a solid line of resistance right there. You can see it right over here. There is something in the way right here. So if you were to buy right here, extremely risky because, well, if it hits here, it might drop. Just like this over here. If you were to say have a trend line just right over here, okay, right here, you got 1, 2 points, 3, 4. Okay, perfect. Let's pretend we didn't even see this. Okay, right here or right here would be good points of resistance. All right. If you haven't seen my support and resistance video, this would pretty much get you at the speed. So right now we have this. Now, when you see the price hit this, would you go like, would I buy it here? Well, why would you buy it here? It's so close to resistance. You would never want to buy at the top and sell at the bottom. You want to buy at the bottom, sell at the top. So either you just don't trade and wait for it to break out of 20, and then it'd be safe. So this goes back to breakout buying. You can buy it once it passes probably 21. Like as soon as it hits 21, then it's safe to buy. But if not, say you bought it right here and you weren't doing any of these strategies and you just straight up bought it right here because you didn't want to miss out on a potential big move, well, then what happens? Well, you get pretty much destroyed. Okay, so what you'd want to do is just wait for it. If you didn't get in down here, why would you get in up here where it's close to resistance, right? You'd buy it at the bottom. Then you can go ahead and just buy it here, all right, or here. So in this case, now it's going back up. All right, would you buy it here? No, you wouldn't. You'd wait for it to break out and then buy. So usually what happens if like you have these points of resistance and it goes back up to 20, it's still not safe to buy yet. Until it cracks 20, then it's gonna see, then you're gonna see a run up. But pretty much over here, that's what the breakout strategy is doing. It's protecting you and helping you, with your risk. So if you buy it down here, it goes up here, drops down, who cares? Because you're still in profit. But if you buy down here and it goes down, well, then that's not good for you. So this over here is a perfect example of what you can do if you didn't get in yet. You can get in at 21, and then chances are you can probably see this a lot higher. Now, that is one example of a could be scenario because this hasn't happened yet. Now, moving on to this scenario over here. All right, so you got this downtrend. Let's get rid of this uptrend because right now, well, you saw this uptrend here. Then it broke it. Then you're like, okay, it's been confirmed. Okay, so now it's in a downtrend. Let's delete that. You have your support line right here. All right, now it's in a downtrend. So as of now, as you can see, it tried to go up, couldn't do it, and it was in a downtrend this entire time. Now, you see this right here. So as you can see, would you buy it here? No, it's risky. Why? Well, because it's like at resistance, right? Just like this over here, at resistance. If, say, for example, you came down here, and say, for example, you got this. Would you buy here? It's at resistance, but it broke out. Would you buy it here? Well, here's the thing. This over here, you could take a chance. But what happens is that, well, then you get this. You could have made some profit here, but then it pulled back right in the middle. So if you got in right here thinking it was a breakout buy, it's okay because you can get out right here for a small loss, very small loss. All right, now would you buy it right here? You wouldn't because it's right on support and resistance. But right now it's looking like 1, 2, you're at a downtrend. Okay, this line right here. All right, as time goes by, boom. Would you buy it here? No, you wouldn't because it's still below resistance. But on top of that, it's respecting this trend line that's going down. So then you wait, then it goes like right here. All right, would you buy here? No, you wait. Just wait. And then what happens? Well, closes down here, all the way down here. All right, would you buy here? No, you wouldn't. So, since you're already in an uptrend and you broke the uptrend, so if you saw that line right here, then this would be a terrible spot for you. If you didn't get in down here, then getting up here would be a little bit more risky unless you buy at the breakout. So what happens? Goes down here and then goes back up here. Would you buy it here? No, you wouldn't. You just wait. All right, so since you already had this scenario right here where, it's underneath this resistance part, and then look, it's looking like it's breaking the downtrend. So what's going to happen now is that, well, should I buy it here? Well, you could because it broke the downtrend, but it's better just to wait. So say you wait another day, you're super patient, right? If you're in the stock market, you have to be patient or else you're just going to lose a bunch of money. So this is the day 1, 2. All right, good enough volume. Has a chance on going up. Well, will it? Support, there's a support down here now that's formed right here. And right now, downtrend right here. It's above it and also resistance. So what happens? Boom. You get a little dot right here. All right. Now, since it broke the downtrend and it held above it, so you can see it's a solid candle, not like a wick. A wick can mean many things. But the fact that a solid body closes under, that's bad. Above, it's good. On top of that, what's better? Downtrend right here, broke above it and held above it. What it could have done was come back here, but since it's above the uptrend and the downtrend, going up here, it's really fine. So should I buy here? Yeah, you can. You can actually buy it right here because it broke out. So what happens after the breakout? That's right. If you were patient and you did this, you'll get paid back with a lot of reward. I mean, that's insane, right? So, as for this is breakout buying. It's to keep you safe. And if you didn't get in at the bottom and you're getting it near resistance, that's how a lot of people lose up money and they end up being bitter and they just trash talk a bunch of stocks, which I've seen that happen many times. So this was it for breakouts. On to the next one. The next lesson will be the pullback strategy. So what is a pullback? So as you know, after stock has had its run, so TGGI for an example. So as you know, well, people that have been in our Discord know that we got in TGGI around this price right here, around 006. Where would that be? Right here. Okay, we got it around here. And then what happened? Well, it started to run up all the way up here. And what do people usually do when they see this run all the way up? They get FOMO. They have the fear of missing out, and then they want to buy it up here, and then it goes up even higher. And then people down here like us, we were like laughing because we were making quite a bit of money. But then people get impatient and, the fear of missing out and greed kicks in and then they get greedy. They start buying up here. And then what happens? Then the stock drops back down all the way. Now here's the thing. For us that got in right here, we're happy. I mean, if it went all the way back up, we didn't sell it, came all the way back down, who cares? Because we're still making money. So, but here's the thing. Pretend you didn't see this. All right, pretend you didn't see this. All right. So as for the breakout buying, right? Like I said before, you can do it on a breakout. So could you buy here? Well, it did break out technically, but since it's this high, your chances of success are kind of really low. But you could still do it. Maybe not a full position, maybe like a tenth of what you would have put in to just ride it a little bit longer. All right. Now, would you get it up here? Well, absolutely not, because, well, again, this is way too high, and I'll be teaching about indicators in another video, but this over here was indicating that it was topping out. So, would you buy here? No. Would you buy here? No. Would you buy here? No. You'd want to buy it down here, right? But then you go like, well, how was I supposed to know it's going to come down here? Or like, I can't get it down here. It's this high. Well, here's the thing. You just have to be patient and wait for the pullback. Well, you'd be like, well, there's no way to tell if there's a pullback. Well, here's the thing. Stocks that run up this high, this fast, will pull back. So what we actually did was we held our position here, and this was just confirmation where, you know, the uptrend is confirmed and there's a lot of attention to the stock. So what did we do? We didn't wait. We didn't buy it up here. We didn't buy anywhere here. We bought it down here, but we want more shares. What do we do? Wait for the pullback, maybe up to this level. Okay, so if I were to take the indicator, you see this one tip, and then you see right here. So if I put a line right here, boom. Lines created. All right, you can see 1, 2, 3, 4, 5. There is something here. If we want, we have to wait for it to pull back here. All right, what happened to the stock? Pulls back. Should we buy it here? It's pulling back. It's the dip. No, because why? Well, what's holding this up? There's nothing here, no structure. Comes back down. Should we buy right now? It's a good time. It dipped even lower. No, you'd want to wait. So, you know, to be a trader, you need to be patient. Like, it doesn't matter. We held this stock for about 2 months and we made, you know, a huge gain. If you check out a Discord, you see the testimonials, how much we made. All right. But pretty much you want to be patient. All right. So it dipped here. Our target's right down here. Should we buy? If we buy here, what happens? Boom. We would have got screwed. So impatient people lost lots of money. All right. And it's close to our target. Well, you know, it's close to 15. Should we buy here? No, we shouldn't. Why? Well, because it can fall more than just to 15, right? You see this right here? You got 1, 2, 3. You know what? It could even fall down here to 9. Why? Well, because you got all these touch points right here. And then let me just draw another one just to prove a point. And we got one more right here because you got 1, 2, 3 for the tip, and then 4, 5. And that's a good amount of touch points. So what happens? You can bind these levels. Also, it will tie into layering in a bit, which I'll show you. So right now, it's going to drop. All right. We want 15. Let's go. So, oh, it's going back up. Should I buy here? No, because it hasn't hit our target. But it's reversing. How do you know that? Right? I mean, if it went up this high, it come down just as hard. And what do you know? You're buying right at resistance. So it'd be extremely risky. All right. You just want to wait because you're patient and you're a good trader. You just want to wait. All right. Now, you know, some people go like, oh, man, it's going to go back up. It's going to go back up. No. Because resistance right here, you're buying close to resistance. You want to buy at support. You wait because you're a patient guy. You're going to be successful. Boom. All right. If you had it at 15 and then the next day it just goes up here, well, you would have made some money. But you can buy it at 15. But right now it has to come back. So say you missed it. You want to just wait for the pullback. You wait, touch 15 again. That's your second chance. You wait, and then you see, okay, it's touching 15 quite a bit, but it's looking like it's coming down. So what can you do? All right, what you can do is layer your buyers right over here. All right, why this? Well, it's just a tip here, but then you see you got 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 touch points on this one. So as you can see, it also ties into the layering. What you can do is, well, say you buy it at 15, 13, 11, and 9. All right, if you layer the buys, what will happen is that if it comes down even lower, you won't be upset because say for example you get 15 and it goes even lower, right? Then you'll be like, oh no, I should have bought like lower. Well, then instead of buying all at 15, you can buy a little bit lower. So what happens at the end? Boom, hits 15 and 16. Well, you're happy because, well, right now you're up in profits because, well, your medium's right here, so you're up, right? Now, you're going to be like, well, here's the thing. If you just had it 15-13, that's fine. You're still in profit. That's fine. If it dips, you can stomach a, like a 10% loss. And if you can stomach that, you're good, right? But if you can't stomach any losses, then don't trade. All right. So here's the thing. Right now, if you're in profit because you did these 2 layer buys, that's fine. But if you had a layer here and a layer here, what would you be doing? If it goes down, you want it to go down. So there's no stress for you. Win-win situation. You bought here, you're up. But if it goes down, that's fine because you can just buy more. All right. So what happens? Goes up, and then you know what? If you bought right down here, you would have been like happy because boom, you could have sold right here or here or here, and then you would have been happy. But say for example, you're waiting for this to go back up here. Well, as you know, the resistance was right here, and as you can see right here, also right here, also here as well. You could have just sold any here. But for example, if you knew it was going to go up higher, which, if you did your own due diligence and research the company, you would have seen that, this company was doing good things. Then you can just wait and just hold your orders right here. And then what you can do is, well, okay, that's strange. Maybe I should buy more. You can relayer. But then here's the thing. You already bought here and you already bought here. Why not try a little bit lower, right? So you wait. Boom, 11 hit. And then what happens? It didn't go to 9. But then what happened? When it was down here, you weren't stressing out. You were just like, yeah, fill my order. Great, it's filled. And then now, since you were patient and you actually put the strategies into place, 1, 2, and 3, you bought it all here. Your average is at 13. All right, it's up here. You're up quite a bit. All right. So in our situation, what we did was, well, for me, when it was pulling back down here, I didn't believe it was safe. I knew it was going to bounce here, but I just didn't know where. That's why I put these targets up. Now for me, what I did was I bought like around 2.5 million shares at the 6, and then when it came back up, went all the way back down, I bought more at 15. And then what I did was, okay, well, then if I bought at 6, right? So if I got these out of the way, all right, so say I bought here. So I bought an even amount, okay? So I ended up, so if I bought at this level and I bought it at 6, right in the middle is where your average would be. So technically, my average was around 12, 13, around there. Actually, let me just lower this down here because I actually bought a little bit more than usual. So I had 2 million shares down here, but up here I bought 3. So you know what? If I bought an even amount, my average would be like at 11 or so. But since I bought a bit more up, my average is slightly higher at 13. So what happens? When it was like this, it kept bouncing, and then boom, it's all the way up. All the way up right here. So here's the thing, right? It also ties into breakouts, all right? Since you saw this as resistance, and you see it bouncing off support, do you buy here? Well, you could. You could buy here. Or you wait for the pullback. Well, what's the pullback? Boom. You get a pullback right there. So you apply the trading rule. It broke out. It pulled back. All right. That's 1 and 2. All right. And then what do you know? Boom. You're rewarded. You're rewarded because you were patient and you stuck to the strategy, or you actually applied strategies. So at the end, we just ended up getting out all here just because I saw this coming. And that's pretty much it for TGGI right here. Same for HCMC. A lot of people really like this stock, right? Would you buy here? Yes, definitely. I was telling people to buy this for like 2 weeks. And then what do you know? Boom, pops up. And then would you buy here? It's kind of risky. You would want to wait for a pullback. Boom, goes up here. Well, some people go like, well, it's never going to come back down, or the company is garbage, stuff like that. It really screws with people's minds. But then here's the thing. If you're a pro trader, people's opinions don't matter to you. What matters to you is your strategy and your plan and your own research. What do? You wait for the pullback. Well, where can it pull back to? Well, 14 is good, 15 is good as well. So if you want to be patient, you buy it at these levels. Boom, you get rewarded right here. Dipped as low as 13. You could have got it at 13 as well because you got support levels right here. And then you can buy right here. You're like, oh no, it looks like it's going to go down. Well, that's fine. Don't buy it then. And then what happens? Boom, back up. So that's tying into the breakout, the pullback, and also the layering as well. So I have an example of layering for you. But the next thing I'm going to talk about is a double bottom. All right, so the next strategy I'm going to teach you is the double bottom strategy. So what is a double bottom? So to the left, I have Kodak. I made a lot of money before I even started my Discord. And this was pretty much like there was 2 double bottoms that I just couldn't ignore. And I made quite a bit of profit. The next one over here is TXTM on the right. And that over here, a lot of people already know this in Discord, but I gave it to people. And a lot of people just doubled their money. Some people like, made a big amount because they put a decent chunk in there. But this was pretty much like 1 week we got like 78%, close to 100, and we were pretty much happy with that, and we pulled out. But double bottom here and a double bottom here. So first off, a double bottom. So usually what a double bottom is that, well, like this over here, Kodak. It went up super high and it came all the way back down. Buying here would just be extremely risky. And then it's coming back down. Oh, it's dipping, I should buy it here. No, you shouldn't. Why is that? Well, because, well, first off, there's nothing holding it up. Really nothing. Okay, so what you could do is that, well, you wait. You wait, what happens? It goes all the way up here. So let me just look at it as, well, we didn't know that move was coming. Okay, so that way you can actually, have an idea of what you're looking at when you look at stocks that have potential. Okay, looks like a bottom's right here. And then, well, it made a clean bottom right here. So let me just put a line right over here. And you want to see, does that match anything? Well, let's check back here. Anything matching? Nothing so far. Nothing so far. Oh, it matches this back here. All right, and what do you know? There is another support level then. If you're going all the way back, like if you can't find support and resistance, again, watch that support and resistance video. It will really help you out. Next bottom is right here. And then right here as well. Okay, reason for that, well, just because, well, you got 2 touch points here. I'd say right here. You got 1, 2, and 3, 4. There's something here for sure. A little bit lower in my opinion, just because you want to respect this. You got 1, 2, 3, 4, 5, and 6, 7, 8, 9, 10. There's just so many perfect touches, so this has to be one of the ones. This over here is just in case, well, you never knew about the stock popping off in the first place. So right here would be an excellent entry as well. Okay, and this over here, I put it up there, but actually it looks like, judging from this, no, this is fine right here, because you got this, and it looks like right here would be good. Right over here, I would say right here. Nope, the tips are very important. So right here, right there, oh, perfect touch point. Okay, it's sold off like crazy. All right, you got 1, 2, and 3. Now, if you want to apply the breakout, pullback, and layering, and the double bottom at the same time, let's see if this works out, okay? So, this day right here, okay, it comes back all the way down. All right, you're patient. You're a good trader, so you wait. You wait for the first dip. All right, it dipped to 5. You can buy at 5 if you want, right? Let me just pull this out. Okay, you buy at 5. Say, for example, you're a patient trader and you did the layer buying strategy. Okay, say, for example, you didn't even know this would bounce here. But from the previous resistance from the, all the way to the left, you have this right here. Okay, so you bought here, and what's going to happen? Boom, you get rewarded. Okay, it goes all the way up and all the way back down. Actually, it opened here, went up, went all the way back down. So you could have sold right here for a nice profit just because, well, resistance levels are right over here. So you could have sold right here. But say, for example, you didn't get in yet, okay? And then you're patient. You're just even more patient. Then what happens? Do you buy down? Do you buy right here since it broke out? No, you don't, because, well, big red stick. You get a gap fills. Check out my stock tip videos on gap fills. Okay, so gap fills are always looking to fill, and then what happens? Boom, comes back down. Would you buy it down here? Right? Would you buy it down here? Well, maybe. We'll see. I mean, but then your layers are right here. These are the previous support levels, so you'd want to buy down here. Okay, perfect. 1 touched. Okay, say you bought it down here, it's filled. All right, comes back up, and then what do you know? You got a bottom here, broke out of that. So then, should you buy more here? You can, because it's on top of support, and well, pretty much that's pretty much how you can do it if you want to be safe. And then what happens? Double bottom, and then oh, it goes like this. Now you're kind of worried, but then patience will be rewarded. Boom. Up here, goes like that, opens up here, all the way up, all the way back down, closes here. Should I buy here? No, you should have bought at the bottom. All right, and then boom, and then what do you know? You can sell right here just because, well, again, the support resistance level is like right here, and then you also got one right here. Pretty much you can sell at the tips. And then what do you know? You sold it right here, you would have been in profit. So this is a bottom, and then another bottom right here. Yeah, it didn't fill your orders, but then over here it's a lot more safe than buying up here. Okay? So that's an example of a double bottom. Another example would be this one right here. Again, double bottom right here. You can see how it formed a bottom. All right, and look, what do you know? Perfect touch points right here and right here. So if I were to draw a line right here, that'd be the case. Okay, so you didn't see that? Actually, just for education's sake, let me just do it for you. Okay, so right here, 1, 2, 3, and 4. All right, you'd want to buy here. Like, again, should I buy down here? Well, it's close to resistance. No. Okay, comes back down. Should I buy here? No. And then you go like, oh man, I should have bought it up here because it went all the way this high. Well, first off, how can you actually know it was going to go that high, right? How would you know? You wouldn't. But you want to get in. So what do? You be patient. You wait for the pullback. Pullback comes, and again, gaps, they tend to fill. Don't buy it up here. Don't be, FOMOing into this. And if you watch the stock tips video, it'll tell you gaps usually get filled. You know what? This entire like stock itself is just the testament to like gap fills. It will happen, right? So you just wait. You wait, and you go like, oh, I'm getting impatient. Well, the thing is, patience is the key to trading. Comes back down here, then you can buy right here. You can buy it right here. That's fine. You can buy it right here. You can fill in your order, and then you just wait. Comes back down. Whoops. Comes back down right here. All right, and then now you're panicking. You're like, well, it's going to come back down. Well, here's the thing. You got all this support right here. You should not be panicking. If you know how to do your technical analysis and you did your research, or you just know this is a good company, what happens? Boom. Should you buy it right here? Well, you could. You could buy it up here when it gets down here because it broke out of this support level. So now this resistance turns into support. Then you can just buy right here if you wanted to. And then, or you wait for the pullback, which is even better, but it still broke out of it. And then what happens? Boom, 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 all the way out here. So yeah, you missed this, but who cares? Because you got this, because you're patient with your strategy. The chances of you losing in the strategy are very low. If you apply technical analysis and all these trading strategies, your success would be a lot higher. So another thing for TXTM, right? Same thing. And again, let me just put this down here. Okay, support level here. You got resistance level here. Actually, right here would be actually a good example because you got so many of these ones, right? So a good example right here. Okay, so stock's dropping. Oh, pulled back. Should I buy it down here? Well, you could. You could if you really want. But what's going to happen is that, is there any support to base it off of? No, nothing. Well, the thing is, you saw a wick here. You saw another wick here. Should you buy it down here? Well, you can if you really wanted to. Say you buy right here, then that's fine. Broke out, came down. The thing is, I like to wait for like probably about 2 weeks to see a bottom. Just like this, it took about like 2 weeks to bottom. Over here, it could have been a chance. All right. So what happens is that, well, if you didn't get in, it's only one bottom, but you want to wait for the double bottom. Okay. So you wait, and then it comes back down slowly. Can you buy right here? You definitely can because it's part of the bottom. But then now you're close to resistance. So if you want to be a great trader, like a pro trader, and you're waiting for the pullback, you're waiting for the double bottom, and you're waiting for the breakout, and you want to do some layering, well, you can fill up a lot of orders right down here. But say if you're even more patient and you waited for the bottom at 12, boom, you would have got it filled at 12. Okay, 12's right here. You got 2 days to fill it, 3 days, and then pop. All right. Well, if you bought it down here, you still would have been good. You would sell it right here just because, well, resistance is right here. So you sell it right here. Actually, this is when we got out at 25, and good thing we did because it pulled back. All right. Would it get back in this again? Probably not, just because this was a more of a buy the hype, sell the news kind of play, and we knew it was going to happen within the week, so we just decided to just take our money and run. All right. But we were patient, so we waited for this. Right here, you get in, and then boom, pops up here. Next resistance, you sell here. You're done. You're done with the trade. You made almost 100%. You are happy. If you bought it at 12 and it goes to 25, you made over 100%. So that's a-okay. But this is an example of double bottom buying. Okay? If you want to be patient, again, if you ever heard this before, in the stock market, the money transfers from the impatient to the patient. And that's why I want you guys to be more patient. Because without that, you would be down a lot. But if you're patient, all the strategies I showed you, they will work out for you more times than not. Okay? The success rate to this is at least 80%. I mean, there's many different charts out there, many different examples, but applying these strategies to you, you don't have to apply them all, but you definitely can. But sometimes there won't be a double bottom, but you can always do the breakout, the pullback, and the layering. The last lesson to this video is layer buying. So to the left, I have BDGR, And to the right, I have TBEV. I know I already showed you an example from Kodak and TXTM with layer buying, but these two are actual stocks that I'm looking to buy. All right, so this would give you a more, like a more real life scenario of if you were to see a stock, what can you do? All right, so I'll pretty much walk you through it. So first thing is PDGR. Okay, first off, if I took my line right here and went all the way down, and then this is a downtrend. Well, it broke out of the downtrend. Is it safe to buy? It definitely is. But is it safe to buy down here? Probably not, because it's close to resistance. So what do? All right. So for me, I have my layer buys at 7, 8, 9. Do I want to buy it at 10? You could, but that's clear resistance. I don't want to buy it at 10. But you can definitely buy it at 8 and 9 right here. So what I did was I layered my buys 9 and 8 and 7. So if it comes back down, it's a-okay. So the perfect reason for this strategy to even exist is that, well, first off, if I bought right here right at 10 and it goes down to 9, well, I'd be stressing because, well, first off, if I say I put 10 grand in there or something like that, all right, say I put $10,000, drops down to 9, well, I'm down quite a bit. I'm down $1,000. All right, or you split that 10 into pretty much like 3, 3, 3, and then 1 at 10, then that's fine. You have, 1,000 at 10, 3,000, 3,000, 3,000. So when it drops, you had $1,000, you're down $100. Who cares? You're like, oh, it's only down $100 out of my 1,000. 10% is bad, but then you want it to fill at 9, because as soon as it fills at 9, you get a better price. And then, well, you could then, what you want is, well, it can go back up to 10, then you'll be up a lot more than what you spent up here. You'd actually be up when it's back at 10. But then if I had my order at 8, what can happen? It can come back down too, because it's close to resistance. So it can come back down to 8. And then what I can do is like, okay, that's fine. I have the same amount up here. So if I get it down here, it's great. Before it goes up, I can still get the best price. Same thing for 7. I'll say that all the way till it goes past 7, down to 5, down to 6. Then I'd be stressing. But this over here, you're pretty much forming your own net. When it comes down, you catch it before it goes up. You'll always get the better price. Okay, just like TGGI, TXTM, Kodak, same thing. Okay, so this is a layer buy right here. And the next one is TBEV. So, it ran all the way up. Did you buy here? No. Heck no, I didn't buy here. Where did I buy? Well, I actually bought it at 6. Because why? You get a bottom, you get another bottom. I bought it right here. And then it went all the way up. I was up a lot. But what I didn't do, I didn't sell this because I think it's going to go a lot higher. And a lot of people also agree with me. The background to this company is great. And pretty much I don't want to buy here. If I were to buy, where would I buy? Well, good question. So pretty much what happened once it broke out and it came back down, it went back below the resistance level. So you can see this, 12 and 11. Would I buy right here? No, I wouldn't. Would I buy here? I could. So what I did was actually 9, 8, and 7 are my levels of buying if I were to rebuy, because I bought at 6, right? So if I bought down here the same amount, it would move my average right in the middle. But what I want to do is split it evenly, so I get 1, 2, and 3, no matter what I'm winning, because I bought down here. All right, so when you layer your buys here, if it comes back down, you're not stressing. Comes back down here, you're not stressing. Comes back down here, you're not stressing. But when it comes back down to 6, it might be a little bit stressed. But as soon as it goes below 5 and 4, it's done. But this company is currently in the process of being pink, and there's a lot of good things going for it. And, well, I believe it's just a good stock in general. So this case, I'm not stressing till it gets down here, which is fine, because if it's down here, then that's fine, because I bought it down here, right? The first buy was right here. If I bought it here, then it comes down, I'm not at a big loss. But if I bought up here and it comes back here, then I'm sweating bullets, right? Say if I bought right here, which was super unwise, and it comes back down here, well, buddy, you will be down quite a bit. So layer buying here, and that's the safest thing you can do. All right, so that concludes the video for today. I hope this video helped you out, and if it did and you learned something new, please hit the like and subscribe button. Also, if you're from the YouTube community and you haven't joined our Discord, I'll be linking that in the description. It is free, you can join. We give free stock alerts to turn your small account into a decent size account, and then that decent size account into a big amount. On top of that, we want to help you sustain that amount of cash so that you can potentially replace your main income, your job income, with trading income. So you can be at home, make money, do a couple trades, call it a day, and you're done. All right, so I'll be linking the description at the bottom. Again, this is D from Positive Equity Trades. I'll see you in the next video.